All right, everybody, welcome back. Happy Monday. Rupert's with me in the house. We are now just 48 hours away from what could be the most explosive moment for crypto this entire year. The White House and the Fed are about to set off a chain reaction that could send billions flooding into the market, and likely will, very, very fast. And it's not just coming from them. Wall Street, corporate treasuries, and brand new ETFs are raising billions, more than double what every IPO in America has brought in this year. Let that sink in for a minute. And just to buy Bitcoin, Ethereum, and a new wave of altcoins. So today, I'm taking you inside the double bombshell that's about to hit our beloved crypto markets, breaking down exactly what's coming, which coins and which sectors could move first, and why the next 48 hours could completely rewrite the playbook for this market. If you want to be ready for the fireworks, ladies and gentlemen, stay tuned, because what's coming next could change everything. Let's start with what just happened behind closed doors. Just a few days ago, Galaxy Digital quietly pulled off one of the single largest Bitcoin deals in history, selling over 80,000 Bitcoins in an OTC transaction. What I want to know is who the heck bought it, but I'm sure there's plenty of buyers actually lined up. That's nearly $9 billion worth of Satoshi era dormant coins that haven't moved since 2011. And these coins trace all the way back to the mybitcoin.com hack. Literal ghost crypto money, untouched for 14 years. And when this fortune finally moved, the market hardly even blinked. I've been around long enough, guys, to remember when even a 5,000 Bitcoin move would dump the markets and have everyone in fear, right? But this $9 billion was soaked up just like that. Another day at the office, bam. And now here's where it gets wild. Only 15% of all Bitcoin is on exchanges right now. That's the lowest it's ever been. Supply shock is real for those of you guys in the comments who don't believe it. 70% hasn't moved in over a year, and 30% is just sitting untouched for more than 5 years. That means almost nobody is selling, and every new buyer is fighting for a tiny slice of the pie. It's like showing up to a gold rush, realizing that the shovels are already gone. And just to put the cherry on top, Ray Dalio, one of the most legendary macro investors on the planet, is recommending a 15% allocation to Bitcoin in a portfolio. Wow, how the times have changed from just a year ago when everyone was recommending 1 to 3%. And when a guy like Dalio, who spent decades advising sovereign funds and global banks, tells his people to put that much in Bitcoin, you know big money just got the signal loud and clear. And what I want to say, though, is imagine if, because you know Ray Dalio, if he's saying 15%, he's probably got like at least 30% or 50%, because where else do you know? If you guys watching the channel long enough, like Bitcoin has been the best performing asset for 9 out of the 10 past years, and probably 14 out of the past 15 years. And do we expect that trajectory to change? No, because what else is going to continue? What else has the potential of what we're seeing right now? We're seeing a biggest wealth transfer in history go from legacy TradFi assets into this new asset class. And it's not often that a new asset class is just poof, invented and then adopted by the world. This is a once in a generation opportunity. But it's not just Bitcoin. Over the last week, Ethereum ETFs have raked in $1.85 billion in new flows. That's over 25 times higher than what went into Bitcoin ETFs last week. Are you listening? Crazy. ETH has now beaten Bitcoin inflows 7 days in a row, even though its market cap is 5 times smaller. BlackRock's ETH-A is approaching $10 billion in assets. Total ETH ETF assets are north of $20 billion. That's programmatic, regulated institutional demand. Those are the kind of flows that should make you want to double check your own bags. I know it has me. Certainly you guys know it has me. Been reallocating. Did my voice just crack? I just cracked. That's how it affects me. It's like, whoa, you know, like, I mean, we kind of saw that, we knew those was coming, right? How long have I been telling you guys this rotation happens from Bitcoin to altcoin, Bitcoin to ETH to major caps, et cetera, et cetera. We've been talking about it for ages. It's actually happening. And we've been way ahead of this, right? If you guys are subscribed to the channel, you know that. for like 6 weeks or something like that. We've been talking about the rotation in ETH, and now we're seeing it heavy. And I'm really glad I made that rotation from my Bitcoin and my ETH. But I'll tell you guys something in the show that has me from even rotating more. And that we'll come to that in just a second here. The biggest players in the world are vacuuming up supply, locking it away, and turning every dip into their entry. The proof is on chain, guys. So what's actually powering this explosion in flows? Let's talk about the engine driving every new leg of this bull market rotation. It started with Bitcoin, as ETFs and corporate treasuries made headlines with their billions of dollars in allocations. But now we're seeing a second phase, the move into Ethereum, and from there into high beta altcoins. Just look at the institutional strategies rolling out in real time. SBET just passed a vote unlocking $6 billion of new ETF buying power for ETH. With 360,000 ETH already on the books and another 100 to 250 million about to hit the market in just a few days. And that's just one mandate. The last 8 weeks saw 98 companies raise or announce plans to raise $86 billion specifically to buy crypto assets. That's more than double the capital raised by every US IPO in 2025. In TradFi, not even in crypto, including the crypto company. This is just insane numbers. Most of these new treasury companies have no revenue, no real product, just a skeleton crew of finance, legal, and investor relations staff. Their entire reason for existing is just to buy coins, stake them, and let shareholders ride the rotation. They're pushing billions into the market, with Wall Street collecting about 20% in sponsor fees just to wrap up altcoins into a different financial product. By the way, guys, if you missed the interview with the CEO of Bitwise, Matt Hogan, and one of Wall Street's top analysts, Jeff Safart from Bloomberg, make sure you guys go check that out. It was a very, very eye-opening interview. I will leave a link for it at the end of this show. But here's something you need to know. A distinct new class of public companies like SharpLink Gaming, BitMine Immersion, Bit Digital, and GameSquare are now raising hundreds of millions specifically to buy Ethereum reserves. But here's what makes them different to what Saylor did at MicroStrategy. They aren't doing this with debt, which is kind of a more dangerous way to do it. Every one of the treasuries was built through equity issuance. And I'm getting these kind of offers all the time, guys. People are literally messaging me saying, Kyle, do you want to do this Ethereum strategy thing? Do you want to do this SUI strategy thing? I'm not really sure how I feel about them. I personally, I need to look into it more, right? That's the truth. I need to look into it more because I just feel more comfortable buying the spot assets and knowing that these treasury companies are going to buy bags and sign them higher. But you do kind of see this like 2017, 2021 altcoin cycle happening right now on publicly traded companies who are buying these things. Like those things are appreciating more than our altcoins or meme coins, right? Like, so I am going to look into it a bit more. I'll let you guys know when I have a bit more understanding for it. But here's what makes them different to what Saylor did at MicroStrategy. They aren't doing this with debt. Every one of these treasuries was built through equity issuance, meaning there's no leverage involved. So no risk of default or big loan deadlines hanging over their heads. This is the biggest concern about altcoin treasury strategies is that what happens if you're doing the Michael Saylor strategy and we get a bear market and you have 90% correction and you owe debt, right? That's very dangerous. So I'm glad to see that they're doing a different strategy for these altcoins. It's very important that our market doesn't come crashing down parabolically because of these strategy companies. Let's take SharpLink as an example. They raised $425 million through PIPE deals and ATM offerings and built the single largest ETH position of any public company, staking 100% of their ETH to earn protocol yield every day. And if you've never heard those terms, don't worry, I didn't either. But here's what they mean. A PIPE, or a private investment public equity company, is when big investors privately buy shares directly from a company at a negotiable price, usually in bulk. So this company gets immediate capital without having to do a full public offering. An ATM stands for at the market, which is a way for the company to sell new shares on the open market. Both methods are tools to raise cash quickly and efficiently. And together, they let companies like SharpLink build up their ETH treasury at scale, all without taking on risky debt or owing anyone interest. And just to show how fast these treasury companies can move, today SharpLink added another $295 million worth of ETH to their stack, now holding 438,000 Ethereum. Oh, yeah. I wish I just had a fraction of that, right? Tom Lee's Bitmine immersion raised $250 million in June alone, adding 81,000 ETH to their balance sheet. Bit Digital pivoted out of Bitcoin mining and sold BTC to redeploy their capital into Ethereum, which they, of course, staked for ETH yield. GameSquare is using DeFi partnerships to target annual returns between 8 and 14% on their treasury through lending, providing liquidity, and supporting core DeFi infrastructure. Now, that gets a little bit more risky, obviously. It's a little bit more aggressive than just staking your ETH for that 3 to 4%. Now, as a treasury company, you've got smart contract risk audit, you've got exploit risk and these kind of things, but it is more appealing to people who have a bit more risk. And maybe if they have these insured, I don't know if they have them insured or not. Hopefully they do. If they do, then that's a lot better, right? Now you can get 8 to 14% instead of that 3 to 4%. It makes it a lot more appealing. It's a different type of financial product. And it's not just Ethereum. Now we're seeing public companies use the same model with other altcoins like Sui. Mill City Ventures just raised $450 million through a private placement, all equity, no debt, to launch the first Sui treasury strategy as a public company. Guys, that's nearly $500 million. And nearly all of that capital is going straight into Sui as their main reserve. It's basically the ETH treasury playbook all over again, raising cash by selling shares and building long-term position and completely sidestepping the loan risk or the leverage. We'll be digging more into Sui later this week because, let's face it, each and every time the market takes a dip, Sui is always one of the strongest runners out of the gates. So if you have any favorite Sui ecosystem plays, let me know in the comments below, guys, and I'll make sure to at least consider them and do some research on them before making our list for the Sui altcoin show. We already have a pretty good idea, but if you guys have anything new and interesting, let me know, and we'll check it out. Now, you've got non-Bitcoin corporate treasury assets now sitting at $7.3 billion. And Bitmine Immersion just announced plans to raise another $2.5 billion purely to buy ETH. It's a supply squeeze on steroids, ladies and gentlemen. For those of you guys who said supply squeeze was bullshit, okay, I hope you see it now. We are witnessing a changing of the guard. The power is shifting away from old cypherpunk whales toward companies with a decade-long outlook. How do I feel about these companies buying up all of these tokens? And this is what mainstream adoption looks like. We all hoped that one day we would have massive mainstream adoption from a lot of this stuff. And now it's a lot of speculation. People are buying these assets, speculating that one day in 5 or 10 or 15 years, everything's on chain, because after all, it is called Web3 for a reason, right? We're bringing the internet of value, decentralized value to the internet. And everyone's speculating right now that in a few years, these infrastructure plays, these DeFi plays, these layer ones, these layer twos, Ethereum, Bitcoin will all be used and massively mainstream adopted. And this is Wall Street front running and institutions and corporations front running what they believe to be the rest of the world that will do it too. These are the first movers. These are the early adopters in the Wall Street phase, right? The early adopters for retail, the curious ones. We were back in like 2012, 13, 14, 15, 16, 17 even, right? Definitely, that was still considered adoption, even 2017, early adopters. Now we're starting to see that early adopters happening on Wall Street and in corporations. So how do I feel about it? Well, I feel like that was just inevitable, right? We wanted to see massive mainstream adoption. And if you've been watching this channel for a long time, or you've been in this space for a long time, we got way ahead of everybody else. And the fact of the matter is that still like 4 or 5% globally, people hold Bitcoin and crypto, which means we still have most of the world to still onboard. So if you're wondering if you're watching this today, if you're early or not, that should answer your question. How much more upside do we have to go in this market? A lot of upside. The entire crypto market cap is at 4 trillion. I think that we easily go to 100 trillion over the next 10 years, right? With a lot of that money going into Bitcoin and Ethereum, and then much more going into the top. But there's going to be a lot of things, a lot of new inventions, a lot of new innovation happening, and we're going to be watching for those as well, because we want to catch the next Solana. We want to catch the next Chainlink, right? The next whatever it is. And I think that they're going to be in applications in the future. Some investors see this structure as a huge upgrade compared to the old model. That is selling equity instead of the debt model, right? The Bitcoin treasury playbook that Michael Saylor pioneered at MicroStrategy was all about raising money through convertible debt, basically borrowing billions with low interest rates, promising lenders they could turn that debt into stock if the price went up. It was aggressive and it made headlines, but it also meant the company was always walking a tightrope. When the debt comes due, they'd have to refinance, pay it off, or issue more shares, which could crush existing investors. The new era of ETH treasury companies is doing the opposite. They're raising cash to equity, sidestepping all these risks that remove a whole layer of fragility from the system, letting them focus on growing their yield and supporting the network. And there's another twist. The market sees this. Shares of ETH treasury companies now often trade at a premium to the value of ETH on their balance sheet. For example, GameSquare's premium to ETH book value reached almost 14x at one point, showing that some buyers believe this new model will pay off well beyond just holding ETH spot. That means buying shares in these companies can be a leverage play on both ETH price and on-chain yield. And this is exactly what I was talking about before. I don't really know why these people are willing to buy these treasury companies at 14 times the book value. And this is what I want to do a bit more research into figuring out. To me, it doesn't make any sense, but a lot of things in the TradFi world don't make sense to me. But for anyone who missed MicroStrategy's early crazy astronomical run that outperformed Bitcoin, outperformed like every other stock, this ETH treasury rotation could be the next opportunity to get that. And that's why I don't want to discount it as something crazy to do. I'm going to study a little bit more and see if I want to go into any of these ETH treasury stocks, because they could vastly outperform any of our crypto spot holdings that we have. Kyle, what about all of the other altcoin strategies? You've got Solana strategies, you've got Sui strategies, and there's going to be others, right? There's going to be, we'll talk about a meme coin one that's coming out soon, but you've got other ones, right? And what do I think about them? Well, I think that they're going to do very, very well when we get into this kind of parabolic stage of this bull run, whenever that is, whether it's Q4 or it's next year, I don't know, right? History says it'll be Q4 this year. So what's going to happen to those strategy companies? They're also going to, because the price of those underlying assets is going to skyrocket, those stocks are probably like high beta plays on those tokens. So they're going to actually probably outperform that. But just like the altcoin market, you're going to have to be very, very careful when you want to exit, because when the market does come crashing down, and these alts will inevitably come crashing down and lose, 50 to 99% of their value, these treasury companies are going to do the exact same thing. And because they're not doing leverage, they'll survive, and they'll just be really boring for like 2-3 years until they're not, right? Until the next cycle comes around. All right, guys, now let's move even higher up the risk curve. If you believe ETH is just getting started and you're ready to handle more risk, then it's time to look at ETH meme coins, and not about buying them. No, we're going to talk about Wall Street and ETH meme coins. You might be thinking, like, meme coins, aren't those just lottery tickets that end up at zero? Way too risky. But here's the thing. When ETH breaks through $4,000 and starts making new all-time highs, the right ETH-based meme coins can deliver insane returns. Every big Ethereum run sparks the pattern. Once the rotation kicks in, the memes run it up turbo style. We've seen it play out cycle after cycle. And to top things off, guys, the altcoin treasury trend has officially gone full degen. We're seeing NASDAQ traded companies like EBZT creating meme strategy treasuries, literally stacking Bonk, Pepe, SPX 6900, and other high octane meme coins as part of their official playbook. And this is just the beginning. It's only a matter of time before we start seeing treasury vehicles built around the wildest, most viral ETH meme coins. And this is what I'm talking about. Like, even Wall Street has degen FOMO fever right now. And it's not going to end well for a lot of people. This will be their first, for a lot of people who want exposure to these super high risk, high reward plays, it's going to be like their first time that they got into a cycle, and they're going to round trip their bags. They're going to buy into FOMO. It's going to pump like crazy. They're going to wonder why they ever invested in stocks in the first place, like normal stocks. And then it's going to come crashing down, and they're going to go do full round trip, and they're going to exit, and the market's going to be quiet and ugly for a while. This is the typical crypto cycle rotation. So for now, guys, I'm still holding mostly blue chips. We have this barbell strategy. Sure, I have some SPX 6900. I have some Fartcoin. But it's a small part of my portfolio, right? And as we get progressively more up the risk curve, I will allocate more to the things that we think that they're meant to, the things that we think are like very good plays for the time in the market right now, right? But where we are right now is it's still Bitcoin and ETH's time to shine, right? But make sure that you guys are subscribed to the channel and have your bell notifications on, because when those opportunities come, we'll be sure to cover them on the channel. And if you've been here for a while, or if you're new to the channel, in 2023 and 2024, we called a bunch of these things because the market was ready for it. And that's what they wanted. We called Pepe early. We called Bonk early. We called WIF super early, 100X on that one. And so, and there was others, right? Many, many others that we called that did phenomenally well. And so we just have a great team that can look for all these things. And another thing too is, we're starting to look at this right now. We've got, I finally, for those who maybe haven't looked in my Telegram for a while, about last week, I dropped a play in there. It was GP, Graphite Protocol. And it was kind of it was something that I shared in there early, and it did like a 2X within 5 days or something. A little bit of a correction on it now, but actually this is a good time right now where I'm probably going to load up a little bit more. Why? Because it's essentially going to benefit from the success of Let's Bonk, which is completely dominating the picks and shovels of meme coin. Anyway, so the point is that I am starting to, when I think there's a really, I don't want to say safe, but like a good, at least a mildly high conviction play in there that has some sort of logic and fundamentals behind it. And that one totally does. If you guys aren't in the Telegram, make sure you go check it out. All right, guys, so there's still a lot more to talk about. We're about to talk about why I'm still hesitant to rotate even more of Bitcoin into ETH. I'll talk about that in just a second. But first, a quick word from our wonderful channel sponsors. BloFin is a no KYC exchange open to Americans, except for those in New York and Washington. Sorry, guys. Low fees and every trading pair you can want, all in one place. Deposit and receive, guys, up to 20% cash back on all your trading fees. And if you sign up with my link, send proof, and you'll get access to my private Telegram group. Altcoin season is coming, and I'll be sharing my best calls there. And did you guys know that you can hold Bitcoin in your IRA or 401k and watch it grow tax-free? Bitcoin IRA is America's first and most trusted crypto retirement platform used by over 100,000 people. It's fully regulated, with secure, insured custody, 24/7 support. Rolling over your old 401k or IRA just takes a few clicks, and you get all the upside of Bitcoin without the tax headaches. Stop letting your dollars lose value while crypto leaves traditional funds behind. If you want your retirement to work harder for you, Bitcoin IRA is a move. And if you guys didn't see my video with the founder, make sure that you watch it because it gives you all the info that you need. And if you're interested in using Bitcoin and crypto to retire. Okay, so that's enough of the meme coin talk for now. And back to why I believe the overall market is still headed much, much higher from here. All of this capital rotation is happening against the wildest macro backdrop in a generation. The US-EU trade deal is unlocking $1.35 trillion in redirected foreign capital, with the EU agreeing to buy $750 billion in US energy and invest another $600 billion into the American economy. You guys know I'm very, very bullish on US energy. If you guys got into the Hadron sale on Commonwealth, congratulations, that sold out within 24 hours. And I'm extremely bullish on Hadron as a company. But anyway, this is the fantastic deal with the US and what Trump is doing. And the tariffs have been set to 15% on European goods, but the US exports face zero tariffs in return. For the first time ever, Europe will buy hundreds of billions in US military gear and fully accept American auto and industrial standards. This deal is a complete reset of global capital flows, sending a fire hose of money into US risk assets and capital markets. If you guys look back at history, trade negotiations like this usually take years, sometimes even decades. NAFTA, the North American Free Trade Agreement, took about 4 years to hammer out. Then you had KORUS, which is the Korea-US deal. It took 5 years. And most deals get stuck in bureaucracy and red tape. But Trump managed to get Europe to the table, land massive concessions, and reroute global liquidity into the US in record time. So whether you guys love him or hate him, you gotta admit, he really does know the art of the deal. And while all that's going on, we've got the Fed stepping into the spotlight as well, facing more political pressure than we've seen in a generation. President Trump has dialed up the pressure, demanding lower rates while standing next to Jerome Powell and even giving him a good old slap on the back. Check this out.
Well, I'd love him to lower interest rates. But other than that, what can I tell you?
Meanwhile, you got Treasury Secretary Scott Bessent is calling out the Fed for losing $100 billion a year, all while they're under fire for blowing taxpayer money, yep, that's yours and mine, on a massive headquarter renovation. The message from Washington is clear. Keep the liquidity flowing, keep risk assets moving, and support the capital markets at all costs. Because Trump wants he wants the best presidency ever. This is his last hurrah. He wants to send everything to the moon. And now Powell may not be as eager to turn on the money printer just yet, but the rest of the world clearly is. Check this out. Global liquidity just hit an all-time high. And remember, whenever that much money floods into the system, it tends to lift all risk assets. You can see it in equities. The S&P 500 futures just cracked a new all-time high above 6,400. That's the direct result of liquidity and capital being pushed into the system. Raise crypto ETFs flow and treasury raises to keep new records. Policy is catching up too. And here's why I think the next 48 hours are going to absolutely be wild for crypto. First, the President's Working Group on Digital Assets is about to drop its 180-day report on July 30th. America is finally leading the global policy discussion on crypto. And here's what everyone in crypto has been waiting for. We might finally actually get confirmation on how the US will acquire more Bitcoin. With real frameworks coming into view, even the most conservative institutions are finally getting off the sidelines, ready to chase the next leg of this rotation. So here's why I haven't fully rotated out of Bitcoin into Ethereum yet, is because of this, right? We might actually see the US announce its plan to have a budget neutral strategy to buy more Bitcoin. And this is something Bo Hines has been hinting at for a long time. If this happens, in my opinion, it'll set off a chain reaction across the globe for all major nation states and governments and everything like that they better get their butt on the ball, because you better believe that once everyone sees America actively buying Bitcoin and adding to the reserves, everyone else is going to follow suit. And guys, if that happens, which I think it will, it's just a matter of time, I honestly don't know if we're going to see Bitcoin dominance continue to climb up or not. So that's why I'm still sitting heavily in Bitcoin and Ethereum. And guys, there's so much bullish momentum for Bitcoin and Ethereum that there's not a whole lot of need to have much of your portfolio in these smaller, more risky assets just yet. Let's wait for that part of the cycle to come. And guys, the next big reason we should expect some fireworks this Wednesday, or at least we'll be watching closely to see if anything significant happens. But Powell is set to speak at the FOMC. We watch this all the time, right? And now nobody's really expecting the rate cuts this time around. The odds are only at 2%. As I mentioned earlier, Trump is a master at playing the negotiation game. And if you saw earlier how he visited Powell at the Fed headquarters, so if Powell even hints at a possible rate cut in September, or sounds more dovish than the market expects, you can bet that risk assets, including crypto, are going to send really, really hard. Now, all it takes, remember, markets are forward-looking, so we don't actually have to get rate cuts this time around on Wednesday. But if Jerome Powell comes out and he gives some clues, dovish clues, meaning that it's bullish for the market, all it takes is one sentence and like hundreds of sentences in the speech or the Q&A that he does afterwards. All it takes is one thing that could send the markets ripping. So let's step back for a second and ask the big question. Where are we in the cycle right now? If you've watched previous Bitcoin cycles, you know the real magic always happens between 12 and 18 months after the halving. Look at the data. After the 2012 halving, Bitcoin hit its all-time high 13 months later. In 2016, it took 17 months. In 2020, 18 months. Now we're sitting at 15 months post-halving, and Bitcoin has already reached a new all-time high. It's like clockwork. Even as the market matures and returns compress, new capital entering is so much larger. With ETF inflows, treasuries building positions, and new global liquidity moving in, the conditions for a parabolic rally are stacking up. On the technical side, Bitcoin's holding the line above $115,000. Every dip toward that level is met with instant bids. Like, this is why, I don't know if you guys saw that correction down last week or whatever, over the weekend, late last week, whatever it was, mid last week, whatever it was, to $114,000 for Bitcoin. And just a couple days earlier in the video, I told you guys we could expect to see a correction. It was, because it had been so bullish, and we did. And so I'm curious, guys, let me know in the comments below if that helped you guys remain strong, because a lot of people were panicked, right? But I told you guys just a few days before we could likely see a correction. And if we do, it doesn't bother me at all. And it could just be a really good chance for anyone who wanted to buy the dip to come in and do that. And now look what happens. So curious, guys, let me know in the comments below if when that dip came, if you watch the channel often, if you're prepared for it, and if it didn't bother you at all. Or let me know if you were afraid that maybe we had seen the top and that we were going much lower. I'm curious to get your guys' thoughts. And remember, guys, it's really, really hard to time the market, right? And this is why we always say time in the market is better than trying to time the market. This is why we always say, guys, trying to time the markets is so hard, right? And time in the market is better than trying to time the market. So this is why I'm never trying to find the perfect entry. I'm just in. We don't want to fight momentum. We know we're in the middle of a bull market. We know what's happening on a macro and fundamental level. To not be in the market, to me right now, would be, for me, a major mistake. Not financial advice, but that's how I feel. Right now, guys, ETH is leading inflows, which is historically the spark that lights up the entire altcoin sector. In every major run, as soon as ETH outperforms Bitcoin, you see meme coins and high beta alts catch fire. How you guys will know if we're nearing the top? Well, guys, keep your eye out for those classic behavioral signals. When your barber or your Uber driver starts telling you about Cardano or XRP, or when Google searches for how to buy Bitcoin are breaking records, or when your feed is packed with portfolio all-time high screenshots and everyone you know is suddenly an expert in crypto. That's the moment when euphoria is peaking and you need to be careful. It's also the moment you're going to feel super rich. And it's a really brutal trap to get caught into. Right now, we're not even close to that kind of mania yet, right? But the window is still open to position accordingly. And keep in mind, guys, scarcity is now at record levels. Only about 0.01% of the global population could ever own a whole Bitcoin. And every ETF, every treasury vehicle, every new capital raise makes that window even smaller. We're at the stage, guys, where it's not about timing the market. Again, I'll say this again, it's time in the market, because historically it shows that if you just miss 10 of the most bullish days a year, you miss most of the gains of every bull run. So don't try to time the market. All of this is converging for a reason. The capital rotation hitting crypto is exponential, with every ETF inflow and treasury raise compounding supply shocks across Bitcoin, ETH, and the best position alts. Technicals support it, macro tailwinds support it, and regulatory clarity is arriving right on schedule. If you want to play the next move, guys, you need to front run the rotation. Get in while the things still feel a little uncomfortable, because by the time it all feels obvious and certain, most of the gains will already be gone. Right now, you're still early, as we've talked about. Wall Street never rings the bell when it's their turn to buy. They just kind of move in silence, accumulate in size, and leave retail scrambling for crumbs once the price is already sky high. Except for you guys. You're here with me, front-running Wall Street, so make sure you're subscribed and drop a comment on which altcoins you think benefit the most from everything that we discussed today. If you guys want some insider alpha on all of these corporate treasuries and altcoin ETF flows, make sure you watch this show. And remember, guys, stay sharp, keep stacking your sats and your Ethereum, and I'll catch you on the next one. See ya.